Hello traders, and welcome to this tutorial session brought to you by Point Zero Trading. My name is Alex and I will be your host during this tutorial. But before we begin, I have to get some legal stuff out of the way, and that is, trading is a highly risky venture. You can lose substantial amount of money and possibly your pants and your shirt if you don't know what you're doing. And naturally, we recommend you don't use any money you can't afford to lose, such as money in your savings account, money you've put up to live off, and any money that you borrowed. With that out of the way, I want to share with you a very powerful tool that the folks at Point Zero had come up with, and I'm very excited to share that information with you. Basically, that tool can substantially decrease the number of losing trades and potentially turn a losing trade into a winning trade if you use it correctly. And that tool is called Safety Net. Safety Net is an expert advisor that you install in your Metatrader4 platform. Once installed, it can be applied on any chart of your choice. It will automatically manage any open trade on that particular chart. It will either manage it until a take profit is achieved or a trailing stop is hit, or it will detect a losing trade and start a series of pre-programmed steps in an attempt to save your trade. It does this by first attempting to reverse the loss and book a profit on the trade, and if that isn't possible, it will then attempt to minimize your loss as much as possible. I know what you're thinking right now. You're probably asking, well, how can this tool help me? Well, let me tell you, this tool is good for the seasoned and the novice traders alike. Why? For the professional trader, it will help them to get rid of that trade that they should not have taken. While for the novice trader, it's going to help them to get over the anxiety of clicking that button to enter the market. But enough of me talking about this. Let's get into it. The first thing I would like to cover is the concept behind safety net position management process. The premise behind the safety net process is that the market is in constant motion. And this motion is fractal in nature, and it happens on multiple time frames and is seen as trends. And so, if one were to enter a position in the direction of the predominant movement or trend, profit would be realized. Undoubtedly, you're probably thinking, well, how do we know which direction the market is going to head? Well, the answer is quite simple. We don't. And that's why we need the position management technique that Safety Net Expert Advisor follows. Well, let me show you what I mean. First thing you do is you enter the market with your initial trade. And instead of specifying a hard stop loss, you specify a trigger value for executing a hedge trade. In this particular example, it's 50 pips. This hedge trade has a slight bias to the opposite side of your initial trade due to the assumption that the market will head in this new direction. If the market continues to move, you book a profit, but if the market retraces and heads in the opposite direction of your hedge trade, in other words, it goes back in the direction of your initial trade, another position is entered with a slight bias to that direction. And again, you will either book a profit or the market will retrace and trigger another biased hedge position. In the end, you'll either exit the basket with a profit when the market trends or realize a loss when the market enters into a whipsaw state. Now, should a whipsaw scenario take effect, the expert advisor will try to minimize the loss by reducing the exposure as much as possible. It accomplishes this by closing positions one at a time while awaiting for a trend to take place. In a worst-case scenario, such as a whipsaw state, the expert advisor will close all positions if the market continues to whipsaw, and the maximum drawdown will be realized. But wait a minute, Alex. I thought you said the expert advisor turns a loss into a profit. So why are you talking about losses? Well, let me see how I can put this. If you think you will not experience any losses as a trader, you may want to reconsider trading as a profession. Losses are as natural to trading as exhaling when you breathe. They will happen. To minimize losses, we normally exercise proper money management, risk control, and good entries as much as possible. Well, now we can also add proper position management technique. For the times that we screw up, we can relax knowing that we have safety net expert advisor to get us out of trouble. At this point, I'm sure you want to get into the meat and potatoes of this tutorial, so let's get started. The first thing I will cover is the on-chart dashboard. Now that we have a basic understanding of how Safety Net Expert Advisor works, let us cover the information it provides once applied to a chart. The on-chart dashboard consists of 6 sections: current exposure, market condition, recovery settings, trade plan, and risk allocation. The first section of the on-chart dashboard is the current exposure. In this section, you can quickly determine the number of trades in your current basket, as well as the number of long and short positions that are currently open. You can also determine your overall net exposure and bias. The net bias is displayed as a positive number for a net long bias or a negative number for a net short bias. The value of the net exposure is also displayed in terms of the deposit currency. Next up is the market condition. In this section, you can determine the spread of the instrument you are trading, the minimum stop level, and also the pip value. The third section in the dashboard is the recovery settings. And this is one of the most important sections of this tutorial, so I highly suggest that you pay attention. The first parameter will show you the maximum number of hedge trades per basket specified. As a rule of thumb, a smaller number of positions means less drawdown but a higher risk of closing the basket at a loss, while a higher number of positions means a higher drawdown but a lower risk of closing the basket with a loss. Why? Because setting a lower number of positions in a basket will cycle quicker versus a higher number in a whipsaw market state. The next parameter shown is the hedge zone size, and it is the maximum acceptable drawdown on your initial trade before the recovery process starts. Higher zone size is safer from whipsaw, but the basket may take longer to close, while a smaller zone size offers a quick basket closure but presents a higher risk of getting whipsawed faster, and you may also experience more slippage. Next up is the range. This setting shows the behavior of the expert advisor and is represented as a factor used in extending the distance of your exit point from your specified hedge zone as positions are added into the basket. More on this later in the tutorial, but generally speaking, a very light behavior setting will increase distance of the exit point, while a very aggressive behavior will decrease the exit point. Next up is your specified profit target, which is the overall profit target for the basket to close. A higher profit target means that the deal will take longer to close, while a smaller profit target will allow the basket to close faster. The last parameter shown in this section is your cost in pips for executing the recovery basket, and is represented as a number of pips paid to the broker via the spread. The next section is the trade plan, and it shows you the entire trading basket that will occur should a recovery situation is required. It will show you the results of your specified settings. At a glance, you can determine the lot progression, the size of long and short positions, as well as the net exposure with each progressive position. A positive number means a long bias, while a negative number means a short bias. Now, before trading, make sure the trade plan doesn't run out of margin. If you run out of margin, the trade plan will display a warning message indicating that you are out of margin. Should that happen, you will need to adjust your parameters until the message goes away. I know I have covered a lot in a short period of time, and you probably will need to watch this tutorial a few times to catch every bit of information that I've shared with you. But the folks at Point Zero Trading are way ahead in the game on this one. They pretty much simplified the process by giving us the risk allocation section. You see, the neat thing about Safety Net Expert Advisor is its ability to tell you your risk before you even click the buy or the sell button in the event that your initial trade goes south. It will display on the chart your projected risk based on the parameters that you've entered. This risk equates to your total capital exposure and is categorized as safe, aggressive, or dangerous. Nifty, eh? Well, more on this later when we explore the Expert Advisor's trade recovery settings. Now, a point worth noting. At the bottom of the chart, the Expert Advisor provides you with additional information regarding market condition, your current balance, as well as real-time floating loss or profit. The input parameters for the Expert Advisor is segregated into 5 setting groups, and those are first trade, trade recovery, colors and font size, general, and alerts. Let us explore each one at a time. The first trade settings are just as the name implies. You specify all the parameters relating to your initial trade via a drop-down menu or a free text entry. And there are 5 parameters to adjust in this section: the lot size of your initial trade, your break-even set point, the trailing stop percent, the trailing stop step size, and the take profit target. It is important to remember that when selecting the optimal trailing stop, setting a larger percent means wider trailing stop, while a smaller percent means a tighter trailing stop. Make sure to select the percent most appropriate to your trading instrument. Highly volatile crosses or instruments with a wide daily range may require a larger percent, while low volatility crosses may require a tighter trailing stop and thus a smaller percent. Next up are the trade recovery settings. These settings are the nuts and bolts of this Expert Advisor. Paying close attention to parameters in this section could make or break your loss recovery effort. Because of this fact, I will spend some time in this section to make sure that it is as clear as possible. In this section, there are 5 settings that you need to adjust, and they are the number of recovery trades, recovery zone in pips, Expert Advisor behavior, profit target for the entire basket, and lastly, the maximum number of trades per day. Adjusting these settings determines your risk profile. As you adjust the settings, you receive immediate feedback about your total risk exposure on the chart. As mentioned earlier in this tutorial, you can have safe, aggressive, or dangerous risk allocation. The first parameter is the number of recovery trades. The thing to remember for this setting is that the higher the number of trades the Expert Advisor takes, the greater the exposure will be, and thus the greater the risk. The second input parameter is the recovery zone in pips. You can think of this parameter as your stop loss parameter, although you won't get stopped at that level. Instead, the Expert Advisor will place a trade in the opposite direction of your initial trade, but with a slightly higher lot size, thus essentially hedging your initial trade plus a slightly higher bias to the opposite side of your initial trade, as per the recovery process described earlier in the tutorial. The third input parameter is the behavior of the Expert Advisor. You can think of this parameter as the speed by which your Expert Advisor will attempt to recover your losing trade. There are 6 available behaviors, starting at very aggressive and ending with very light. Very aggressive behavior is the most risky setting and utilizes the lowest multiplier factor when hedging. Due to the lower multiplier, the position size, and in turn the exposure, will be higher. This means higher risk but faster recovery. Faster recovery means the expert advisor will exit the recovery process much quicker because the profit target will be very close to the zone in pips boundary, and thus price does not have to travel very far to exit the recovery basket. In contrast, the very light behavior is the least risky setting and utilizes the largest multiplier factor when hedging. Due to the higher multiplier, the size of the progressive positions will be much lower, and thus significantly lower risk. However, lower risk will mean much slower recovery. Since the size of the progressive lots will be smaller, the recovery time will be longer because the profit target will be further away from the zone in pips boundary. So to recap, this behavior parameter is very important because it controls how the expert advisor progresses with your position size to realize the specified profit target. A very light setting will force the expert advisor to use smaller lot progression size and thus making the exit point further away from the basket, thus offering less net exposure and lower risk, but the basket may stay open for a very long time. While a very aggressive setting will force the expert advisor to use a higher lot progression size and thus making the exit point very close to the basket of your open positions and offering more exposure and risk, but the basket will close much quicker. You will have to determine the best setting based on your account size, instrument of choice, and risk tolerance. It's worth noting at this point that the expert advisor will combine the profit target, behavior, and zone in pips to determine the progression of each subsequent trade in the recovery process. And last but not least is the maximum recovery trades per day. This parameter limits the number of consecutive recovery positions taken within the recovery basket for a single pair in a single day. It is set by default to 5, meaning 5 recovery positions in addition to the initial entry are allowed per day. This parameter functions as a cap on the number of recovery positions opened to limit risk during unexpected spread hikes or margin hikes. Once the maximum number of positions for the day is reached, the expert advisor will start looking for an exit point with the least damage possible to the account. The expert advisor will start closing trades instead of adding trades for the day. The risk allocation table on the chart provides you with immediate feedback as you change the parameters in this section. Play with the settings and determine the most comfortable risk profile for you. The next input option for the expert advisor is the visual options. This part of the input settings enables you to change the look of the information displayed on your chart. You can customize colors for the 3 risk profiles for the basket break-even line, as well as the buy and sell exit points. In addition, you can also change the look and color of the text of the information at the bottom of the chart. Next up is the Expert Advisor General Settings. In this section, you can manually specify a pip value for the instrument you are trading, or leave it as 0 for automatic pip value detection. You can also specify a magic number for the trades, as well as entering any custom comments you wish to include. Lastly, as an added benefit, the Expert Advisor is capable of sending 3 different forms of an alert when something goes wrong. The first type is on your screen via a Metatrader4 alert window. The second type is through an email, and a third type is through a text message. Now that we have covered all sections in the input parameters, let us take the Expert Advisor for a ride. The first thing you'll want to do after installing the Expert Advisor is to apply it onto the chart of your instrument of choice. The second thing you'll want to do is to adjust your settings and risk profile. If the risk profile is acceptable, a buy and sell buttons will appear on the chart. If the risk profile is too risky, the buttons will not display and an advisory message will appear. Follow the advisory message to adjust your settings. Once you have devised an acceptable risk profile, the third thing you want to do is to wait for your setup to happen. Once a setup develops, the fourth thing you want to do is to click the provided buy or sell buttons to execute your initial trade. Once the trade is executed, the fifth thing you need to do is to sit back and relax. Let the expert advisor do its thing. It is important to mention that the expert advisor only manages one trade at a time. You can either buy or sell, but you cannot do both at the same time on the same chart. You can, however, execute a single trade on multiple instruments, but you will have to apply the expert advisor on each instrument's chart that you want to trade. Once the initial trade or the recovery basket is closed, the expert advisor will provide you with the buy and sell buttons to execute another trade. If at any point you decide to close the initial trade or the recovery basket manually, you can do so by using the Close All button that the expert advisor provides on the chart. In summary, the Safety Net Expert Advisor is a very powerful tool. It enables you to turn a losing trade into a winning trade using an imbalanced hedging trading technique that places alternative pending orders until an exit point is reached. It offers you a complete trade management solution from initial trade to recovery. It is easy to set up and gives you complete control over your risk and net exposure. Get rid of your trading anxiety due to fear of losses. So do yourself a favor and head on over to pointzerotrading.com and add the Safety Net Expert Advisor to your trading arsenal today. If you have any questions, please feel free to visit our website at www.pointzero-trading.com and send us a message. Thank you for tuning in, and until the next tutorial.